Okay, so stocks tumble Friday as losses mount from Iran war impact. So the Iran war was just the wrecking ball to the global economy. Treasury yields climb as bonds sell off and fears grow that Fed rate cuts are off the table. So 2026, these are the odds of seeing a rate cut by the end of the year. This was 2 cuts. This was 1 cut. Now we're at 0 cuts. So what we can expect now, because of rising inflation, is them to actually hike interest rates. No one's expecting them to be hiking interest rates. Here's bond volatility. This is very recently, right? When this goes up, people are afraid of owning bonds. So what that means is interest rates rising, which means the Fed is going to be behind the curve and have to actually hike and increase the Fed funds interest rate. Obviously, that is incredibly bearish for markets. But again, we're in a disruption similar to the pandemic when Bitcoin crashed to $3,000 before skyrocketing up to $69,000. Remember, Bitcoin is digital gold. And so what is happening quietly behind all the chaos? U.S. Senators, White House, to resolve stablecoin yield dispute. That's what was holding up the Clarity Act. So heading into massive disruption, massive stimulus by governments, we get clarity, regulatory clarity around digital assets. And if you want to see how crypto behaves in hyperinflating, money printing, stimulative economies, this is Chainlink priced in the Argentine currency. So the top of the last bull market in Chainlink was 4,600 pesos. Now we're at 13,000 pesos, right? So it's about the currency. Chainlink has been a store of value in Argentina. What happens to Chainlink's price in USD?